What's going on, guys? It's Investing Hustler here, and today I have a special video for you guys. I'm going to be comparing Canopy versus Aurora. Now, I know today I was supposed to release a video that was going to show how much money I made in the stock market doing swing trades and day trade in the past 3 months. Well, actually, I was supposed to release that yesterday, but I got really busy, and I'll show you guys a quick clip of why I was super busy. So yeah, pretty much I was at the Travis Scott concert and it was lit. I just didn't have time to drop that video, so I thought today I just decided to do an Aurora versus Canopy video, which I hope you guys enjoy. So stick around to the end. I'll give you guys my final conclusion. I'm going to read a pretty interesting article comparing those two companies. So here goes, Aurora versus Canopy.
Round 1. Fight!
Well, before we get started, I would like to ask you guys to please give me a like. It really helps my channel and it will push me to make more videos. So let's try to get this video to 100 likes. What's going on, guys? It's Investing Hustler here, and today I'll be doing a very interesting video where I'll be comparing Aurora Cannabis versus Canopy, and I'll be comparing both the Canadian versions of these companies, so ACB and WEED. So right now Aurora Cannabis is sitting at $8. They've recently had a high of $16.24, and they are very close to their 52-week low, which is $5.10. I've made a video before on how low we think Aurora Cannabis can go, and I think the lowest Aurora Cannabis can possibly go will probably be around $5.50. Maybe their 52-week low is a possibility, so $5.10. I doubt I will be seeing Aurora go any lower than that. But let's move on to the technical analysis, and right now it looks like Aurora is a sell. So oscillators say it's a sell, the summary says it's a sell, moving averages says it's a sell. The only way you can see buy is by the 1 minute technical analysis summary, which is a buy, and a strong buy. Everything else is pretty much a sell. So right now Aurora is a strong sell. Aurora has a market cap of 7.957 billion, and they have a PE ratio of 34.97 because they profited this quarter. So I think that's actually a pretty decent PE ratio. Maybe to get that down in the 20s would be even better. Aurora doesn't give any dividends, and they have a total of 961 million shares outstanding. So that's just a quick little summary on Aurora. Let's move on to Canopy. So Canopy is currently sitting at $44.30, and they've hit an all-time high of $76.68, and they're pretty much in the middle of their 52-week range, so they're not even close to their 52-week low. I also do think Canopy, the lowest Canopy can possibly go. It would be nice to see Canopy go below $36, but it seems to have a nice support at $40 right now, so it might go a little bit below $40, but right now the support line does seem to be $40. But if it does break below that $40 support line, I could easily see Canopy going all the way down to the $32 support line. So we'll see how low Canopy goes, but as of now it does not seem to want to break that $40 support line. And if you look at the technical analysis for Canopy, it looks like it's a neutral in the oscillators, the summary is a sale, and the moving averages it's a strong sell. And you look at the 1 minute, it looks like a buy, a strong buy, and a strong buy. And it seems to me, according to these technical analysis summaries, it seems that Canopy is more of a buy versus Aurora. So Canopy has a market cap of 15.06 billion, and they don't have a PE ratio. That's because they didn't profit. I made a video where I talked about their earnings, and I thought they had horrible earnings, so I'm not surprised. On top of that, they have a total of 223 million outstanding shares. So right now Aurora has more than 4 times the amount of outstanding shares versus Canopy. I'm going to be reading a very interesting article where one of the companies is favored more over the other, but I found this article to be very good, so I'm going to read it to you guys, which will add to my comparison of Canopy versus Aurora. And if you stick to the end, I'm going to give you my conclusion as to what company I think is better over the other. and the article is titled Aurora Cannabis, Time to Buy the Blood in the Streets. So this is a summary of the article. So why the cannabis sector will continue to grow for many years. Aurora Cannabis isn't getting the respect it deserves, and when blood is in the streets, it's time to buy. Blood is definitely in the streets for Cannabis and Aurora. So the company will boost its market lead even more on the supply side of the business. So I'm going to read to you guys the most important parts of this article. So let's start off with like Rodney Dangerfield. Aurora Cannabis has been getting little respect, and at least in the cannabis sector, even though it has proven to be a bold competitor that is willing to take risks to secure production capacity growth at the time demand is starting to take off. At the same time, it has successfully and consistently lowered production costs per gram. So Aurora Cannabis is the industry at the macro level. So contrary to what most investors think, based upon my reading hundreds of articles on the pot industry, market forces aren't what have given birth to the extraordinary growth of the cannabis sector. Rather, growth has primarily come from the search from national and regional governments for additional revenue and tax sources. So from there, market forces have of course taken over, but it's the interest in the governments in the new revenue stream that has created the fast-growing legal pot market. So this is crucial to understand when listening to those naysayers that suggest it's a fad rather than a long-term trend, which I agree with this, because who's going to benefit when weed becomes legal for recreational purposes? Of course the government's going to benefit, because they're going to be able to tax everyone for every single gram that they sell. So not only do the companies pay tax, the buyers pay tax, and when everyone's paying taxes on weed, a lot is expected to be sold, especially since most stores are sold out. The government is definitely going to win, because now not only is that a new revenue stream for the government, but let's move on to the article. So the enormous size of the current revenue obligations on unfunded liabilities and underfunded government pensions make this a no-brainer as to longevity. Of course, longevity of the cannabis industry, at least as it relates to government approval and growth. So why some investors are favoring Canopy Growth? So one thing that Canopy Growth has been riding for some time in the stake in the company acquired by Constellation Brands. Since that time, Canopy Growth has been the heavy favorite in the sector, primarily from the heavy coverage it received at the time of the deal and consistently since then. The importance of that on the branding level can't be underestimated, which of course $5 billion invested into a marijuana company was a huge deal, and ever since that happened, we've seen a huge spike in the marijuana sector. Canopy went up almost 100% since that happened, and all the other marijuana companies followed. So that said, the market is going to look more at the actual performance of the company rather than the hoopla surrounding the cash infusion from Constellation. One of the key reasons I see for financial writers being far more optimistic about Canopy Growth than Aurora is because they went all in when Constellation took the stake in Canopy. They are heavily invested in the company and are finding it difficult as they watch Aurora surpass it in production capacity. And as for some retail and institutional investors outside the financial journalist field, they have also grabbed onto the Constellation narrative and are remaining optimistic, even though the aggressive steps taken by Aurora have catapulted it far past Canopy on the production capacity side of the business. So each company has their advantages. I think Aurora will eventually have the production advantage. They will be able to produce more than Canopy. Let's move on. Aurora has a huge advantage in the short and long term as the markets stand today. At this time, it could produce approximately 70,000 kilograms of cannabis, and then by early 2019, it's expected to more than double its output to 150 kilograms. In the long term, its recent acquisition of ICC Lab have pushed its capacity level to close to 700,000 kilograms. Canopy, on the other hand, has the capacity to produce about 500,000 kilograms over the long term. So another factor is Uruguay is an entry into the South American market and was the first nation to legalize recreational pot in the world. So one of the main reasons I like Aurora over Canopy Growth is because it has proven it can identify quality companies to acquire and is willing to allocate capital to that end, which is true. Aurora took a lot of big risks acquiring Canamed, acquiring Pure Leaf, which was very expensive, but I feel like in the long term this will definitely benefit Aurora because now they seem to be the biggest pot producer in the world. So the expectations of investors in the last quarter. So one of the most odd and surprising results of last quarters concerning Aurora Cannabis was expectations surrounding the legalization of recreational cannabis. When reading and listening to a number of responses to the outcome, it was as if the investors and pundits thought there was going to be some sales results coming in, when in fact cannabis hasn't even been legalized by the end of the reporting period, which I talked about that already. Weed got legalized on October 17th, which barely gave them a month of recreational marijuana. So next quarter will be very interesting to see how much revenue they make from the recreational side of their business. And I'm not talking about the obvious idea of sending some cannabis to the Canadian provinces in anticipation of sales, which of course Aurora did. In that regard, the company said it was surprised by the demand of recreational pot, and that's a good thing for the company, as it had set aside some marijuana to meet the demand that should result in some significant sales in the current quarter. As for the revenue generated in the prior quarter from pot sent to provinces, that came in at about $600,000. That will be a lot higher going forward. So $600,000 Aurora made in less than a month, so it's expected to be a lot higher. My guess will be it's going to be around 2 to 3 million, but we'll see. So as for the concerns, the company will sell out of product and be unable to meet all its supplies and obligations. This is what CEO Terry Booth said. Am I sold out? We wouldn't sell out. We have budgeted a certain amount of cannabis for distribution every month. Who would sell out of cannabis? So the point is, while revenue from recreational cannabis can be counted on in the quarters ahead, it also means it will continue to supply its medical and global markets too. When asked about the ability to meet Canadian recreational pot demands, Cam Batley, Aurora Chief Corporate Officer, made this assertion: "We've heard the discomfort of provinces who across the board have not been able to achieve sufficient supply. Our sense is we're doing well out of the gate. We think we have done better than other companies, our peers, but we will be ramping up. We will be able to pick up some of the slack soon." So this seems to be a very good problem to have. Obviously, we've talked about this many times before. Right now, there's a lot more demand versus supply. So Aurora is not even able to supply the amount of weed that is being demanded by the recreational market, which is a very good problem to have. And I'm thinking this is going to be a problem probably for the first 2 years, and then maybe after 2 years the supply might outgrow the demand, which might be a problem. But that's a problem for another day. For now, it looks like we have a very good problem for the next couple of years. But let's not forget, they do have to attend to the medical market, so that's what's making it hard to supply to the recreational market right now. So let's move on to the conclusion. So as some wise investors over the years have stated, when there's blood in the streets, it's time to buy. I think that's the case in the cannabis sector in general, and Aurora Cannabis specifically. So what does it mean by when there's blood in the streets? So right now we've seen a bunch of red days. We've seen Aurora drop all the way from $16 to all the way down to $7.22, and I actually picked up some shares not too long ago, and from the looks of it right now, Aurora is downtrending. Aurora seems to have a resistance at about $7, and I did mention in one of my videos where it's titled analyzing Aurora Cannabis charts. I'll leave the description, I'll leave it right here on the top corner, and you can watch this. And I did talk about Aurora having a support line of $7, and it seems to be that it's getting very close to that support line. It's getting to about $7.20, but it doesn't want to go below that. So right now there is blood on the streets. Aurora has lost almost 50% of its gains, going all the way down from $16 right here to sometimes below $7, and currently sitting at $8 a share right now. So let's go back to the article. So there's not a lot of positive coverage on the sector at the time, or in Aurora Cannabis, yet the fundamentals of the industry and Aurora remain solid and in place. It also needs to be taken into account in regard to Aurora that it had almost everything go wrong recently in relationship to things outside of its control. The combination of the start of the market correction being on the same day it listed on the New York Stock Exchange was the two most notable and important factors. So yes, when Aurora got listed in the New York Stock Exchange, it almost immediately declined. It was very horrible timing by Aurora. If they had that listing even a week prior to legalization, we could have seen Aurora go up to $20 possibly, but because of that horrible timing, of course, Aurora declined on its listing to the New York Stock Exchange. So even a strong earnings report and a positive guidance hasn't even been enough to overcome those two negative catalysts. Because yes, Aurora had the best earnings out of every other marijuana company in my opinion, and even with those amazing earnings, Aurora continued to decline. So beyond what has already been mentioned, another long-term positive for the industry is the general population will have to be educated concerning the difference between the THC, CBD, and hemp. Once they understand the difference between them, it's highly probable they'll embrace some or all of the products coming from them. So Aurora Cannabis is positioned better than any other cannabis supplier to meet growing demands. It'll be very important to see how much sales it has at the end of this quarter, because it'll give much more clarity as to how much cannabis Aurora has allocated on a monthly basis for the Canadian recreational market, and how much of the market lead it is able to take against its competitors as to kilograms sold. So over the next couple quarters, I think Aurora will gain a lot for mind share from end users, and it could become the leading brand in the minds of those looking for consistent supply and product. So I see nothing at this time that could change the growth trajectory of Aurora, but both in the short and long term, as I've said in the recent past, I see this as a terrific opportunity to take position in the company or add to it. Once the firm proves it can deliver on its supply and revenue growth, we're unlikely to see these prices again. The conclusion to this article is there's blood on the streets right now. The marijuana sector has seen a lot of red days, and it's time to buy. But the thing is, it doesn't mean that the red days are over. I could see Aurora hitting $7, and if it does break that $7 support line, I could see Aurora going all the way back down to $5.50. I made a video recently titled "How Low Can Aurora Go?" I'll leave a link right here on the top corner or also in the description, and if you're interested in seeing that video, you guys could check it out. But for now, that's all about this article. I know I was supposed to drop a video yesterday. I was very busy. I actually went to see Travis Scott concert, so yeah, it was lit. And I just didn't have time to drop a video, so today I'm gonna try to drop two, or if not, I'm dropping that video tomorrow. So now to give you guys my last and my final opinion as to which company I think is better, Canopy or Aurora. So let's start off with Canopy. I personally think Canopy is a little overvalued, and the main reason for that is because of that $5 billion investment that was invested into Canopy by Constellation Brands. So that's pretty much what's holding the stock up for Canopy right now, because without that investment, Canopy could easily just be at $20 or lower right now, so their market cap would be a lot lower than what it is right now. So at a $14 billion market cap with a company that has no profit, that's way too overvalued. And as for Aurora, I think that Aurora is built for the future. They are a company that's planning for the future, and they're investing a lot of their money. They're going to be able to produce more marijuana than Canopy, and they have not had a big company invest into them yet. So there's a lot more potential for Aurora than there is for Canopy. Aurora's market cap is only 7.9 billion versus Canopy's almost 15 billion, so it's half the price of what Canopy is. The only bad thing about Aurora is that it almost has 1 billion outstanding shares, which I don't think is the greatest thing, but I don't think it's going to affect Aurora that much. So when it comes to both Canopy versus Aurora, if I had to buy one company right now, I would buy Aurora over Canopy, mostly because I think Canopy's a little overvalued. I would have to see Canopy release better numbers, better earnings in order to be more comfortable with this company. But with that being said, if Canopy does ever go to the around $36 to the $32 range, I will definitely be buying some Canopy shares. And I've recently bought some Aurora shares at $7.50, I think it was 52 cents. But if I had to pick one over the other right now, it would be Aurora. But for now, if you enjoyed this video, don't forget to leave me a thumbs up, and if you're not subscribed yet, don't forget to hit that notification bell and smash that subscribe button. I'll see you guys on my next video. Bye bye.